You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Welcome to the Options Playbook, the program where we break down cutting-edge option strategies and explain how you can incorporate them into your own portfolio. Whether you're looking to grow your capital with some offensive maneuvers or protect your investments with defensive plays, you can find them all in the Options Playbook. The Options Playbook is brought to you by Ally Invest. Anything mentioned today is for educational purposes and is not a recommendation or advice. Options involve risk. Please refer to ally.com/invest/disclosures to review additional risks involved with trading options. Securities offered through Ally Invest Securities LLC, member FINRA and SIPC. Now, let's open the playbook and get started.
Welcome to Options Playbook Radio. I'm your host, Brian Overby, Ally Invest Senior Options Analyst and author of the Options Playbook. All right, well, we're getting to year end and want to mention a few things. I usually, as we get into year end, people are thinking about their accounts, thinking about positions they might want to take a loss on for tax purposes, and some that they might want to take a gain on overall. So I've talked a lot over the last couple of weeks on a lot of our educational events about using options to try to assist your stock portfolio or enhance it. Come up with ways to try to sell a stock that you want to get rid of. And we talked about that on our YouTube channel, the Ally YouTube channel. We went into great detail about that on Apple overall, about I own some Apple. What might I do with it going into the new year after this fairly, basically Apple was the apple of the marketplace's eye, which I struggled with there. But with that said, when we thought about Apple overall, it had made a real strong move going in at the beginning of December and so on. So it slowed down a little bit, but it was up today. And I should mention this, that we are taping Options Playbook Radio. The market is closed right now, and it is December 15th. So in one of the episodes on Options Playbook Radio just recently, we talked about buying Apple as an in the money option contract as a FOMO trade, as a fear of missing out. If you didn't own Apple, here's one way that you could dip your toe in the water if all of a sudden you're seeing new highs and now you want to participate. And that trade, I wanted to talk about that because I just wanted to address the fact that it's a surrogate for owning the stock. So we looked at the Apple trade on December 8th. The markets were closed at that point in time, and Apple was at 175.08. And we looked at buying a July 15th expiration, 145 call option. And we emphasized that the delta was 80. And that's what our goal was. We were looking for something around 80. It never has to be exact. Our thought was, well, that one contract, if the stock goes up one, we should make at least $80 on the option, in theory, via the delta. Whereas if we bought 100 shares of stock and it went up one, well, you would obviously think you would make $1 or $100 on that 100 shares. So it was a surrogate to buying 100 shares of stock. We had an 80 delta. Guess what? The stock did go up. Went down and then up. But at this point in time, as I mentioned, the stock is at 179.30. So the stock overall has gone up 4.25 since just based off the last trade since we talked about it, $4.25. You take 80% of that because we had an 80 delta. Now, delta is dynamic. I want to let you know that it will change as the underlying changes. And if I just look at the ask price on December 8th of that Apple call option was $36.50. And I pull up a quote right now with the markets closed, and it's at $39.90. It's not an exact science overall. But if you look at that, that means that option contract went up $3.20. Stock went up $4.25. You take 80% of $4.25, and guess what you come up with? $3.20. So Delta's dynamic. Right now, I look at the Delta. It says it's 83 because it's a little bit more in the money. It was 80 when we did this trade, or when we did the paper trade, I should say, on December 8th. As always, as on Options Playbook Radio, I always have to give that disclaimer that this is an educational show. It's not meant to be a recommendation overall. But I just wanted to highlight the fact that, yeah, the option did what we wanted it to do. It went up. It gave us some representation of the underlying stock, and it did what Delta said it will do. And whenever we talk about the Greeks, it's always in theory. And I just like to use real life examples sometimes to show that sometimes the theory works, right? It's not always exact. You can have changes in implied volatility that can affect things overall. But in this instance, it worked out. And so with that said, I want to talk about, okay, we're going into year end, maybe rebalancing your portfolio. A lot of people don't think about adjusting your portfolio. Maybe you're getting a little heavy weighted in the tech sector. NASDAQ actually was leading the markets higher today. We did have the Fed come out and speak, and all those concerns about the Fed speaking have gone away, and the market actually finished strong after they made their comments overall. And the NASDAQ was actually the leader of the markets over the S&P 500 index and the Russell. And so let's look at maybe a sector that has done pretty well recently, and I guess it would make sense, but it sometimes gets ignored, is the pharmaceutical sector. And in particular, if you can always look at a pharmaceutical ETF, if that's what you would prefer, if you don't like to pick underlying stocks outright. But today I'm going to talk about Pfizer. And mainly I'm talking about Pfizer because we talked about Apple last week. So we're going to look at an underlying stock that is fairly decent valued. Pharmaceutical stocks overall are valued at a much better level than even stocks like Apple, as far as a price to earnings ratio is overall. They're fairly decent valued. And so we've had a decent run up in some pharmaceuticals. If you wanted to adjust, maybe sell some of your portfolio, where now that you've had maybe a solid run up on the year, how could we adjust? What could we do? Still have nervousness about the inflation. The pharmaceutical area is an area where we can't live without, literally, at this point in time, especially with obviously what's going on with COVID and everything. And Pfizer is one of the companies that helped with the breakthrough with the vaccines, as I'm sure a lot of you listeners know. So how would I do it? I'm going to go out and on the Pfizer situation. I wanted to do a July option contract just because Apple was a July option, but guess what? They didn't have a July contract. So when we get this far out in time, one of the things that's real interesting about it is that you go back to the old cycle of what expirations would be opened when one monthly option contract expires. And it's just so be it. Pfizer's in a different cycle than Apple, which nobody really thinks about as much anymore because a lot of people are just staying in the weeklies, trading those shorter term option contracts that expire week in and week out. So now we're going to go, and with that said, we're not going to do a July. We're going to do a June 17th. We're going to also, once again, look at an 80 delta. And the underlying stock today, as I mentioned, it is Wednesday. The markets are closed December 15th. The underlying stock closed at $58.80. It was up $3.26 on the day. So a good solid move in Pfizer today. If we want to buy an 80 delta option going out that far in time, we're looking at a 50 strike option contract. Now, there's not as many strikes on these further expirations. And I actually like that. I kind of fault the marketplace a lot of times for having too many underlyings that have 1 point strikes in them. And my problem with that is that the more strikes, the more offerings that you have, usually that's going to affect the open interest in general on specific strikes. So if you have less offerings, usually you're going to get a little bit better markets. And I don't mind where this 50 option contract is at. And that's always been a battle of buying options as a substitute for the stock is the stock has a penny wide spread in most liquid underlines, specifically in Pfizer it does. Right now it's 58.90 on the bid and 58.91 on the ask, so it's 1 cent wide. Where this option contract is bidding $10.15 on the bid and asking $10.40. So I have to work the order. Now the market is closed overall, so that does sometimes widen bid-ask spreads on option contracts as they go into the close. But you're talking about a 25-cent wide bid-ask spread versus a penny. That's the biggest headache. But now let's talk about the benefits. All right. This option contract has a delta of 81. And that means that if the underlying stock goes up 1, you would expect this option contract to go up about 80 cents. If we were to buy 100 shares of Pfizer outright, we would be paying $58.80 based off of the last trade. That's $5,880. If we buy the option contract outright, we're looking to spend $1,040. So $1,040 divided by $5,880, we're talking about 18% of the underlying stock price. So that's our maximum risk. That's the most we can lose. We got something that acts like the stock. It's not quite as liquid as the stock, but if I'm thinking that maybe I would sell my Apple option contract to try to diversify my portfolio or rebalance it, maybe this is one way that I could do it. And so I always like to talk about that on year-end things. I think options are a very viable way to assist your stock portfolio overall. And the Pfizer deeper in the money option contracts are okay on the bid ask in general. And so this is how I would approach it if I was looking at a Pfizer option contract. The days to expiration, I don't think I highlighted that it's a June contract, June 17th, 2022. But we're going out 184 days until that expiration date. So it does have an expiration date, and you want to keep that in mind. I had a question just the other day in my email, and I think I'll address it. Somebody just asked that if I were to do the trade in Apple, for example, that we just finished talking about, would you wait until the expiration date and actually buy the option contract? And in general, my answer is no. The reason why we're doing this is we don't want all the risk of owning the stock. If I were planning on that, well, I might buy the stock and maybe buy a protected put. That's a different way to approach it. If I just really want to own the stock overall, it would basically be the synthetic relationship to just owning a deep in the money call option. So most of the time, if I'm doing this, I'm going to set a target price on the upside. I'm going to try to get out of that position if the underlying market does go up and it hits my target. I'm going to do that. And I've talked a lot about just a natural, comfortable place to get out on the downside. And that's really where the strike price is on the call option that you're buying. And part of the reason why is that then that option contract would be an at-the-money option contract. And it usually collects time premium. That's where the bulk of time premium sits, is right at the money. And so on the downside, you have less risk overall if you are incorrect on your forecast, and you have a more explosive option contract on the upside if you are correct on your forecast. So another little benefit there of buying in the money options as a stock substitute. But that's all we have time for today. So that's it for this episode of Options Playbook Radio. If you have a topic you'd like us to discuss on the show or a question you'd like us to answer on the program, you send it directly to me at theoptionsguy@invest.ally.com. Also, follow me on Twitter. I tweet about all the educational events that we do at Ally Invest, and my handle is very simple. It's at Brian Overby. And lastly, I want to let you know about a new landing page that we have set up for an email list. If you'd like to join the email list, and we'll tell you more about what's going on with the educational events inside Ally Invest, please go to ally.com/invest education, all one word, invest education. And you can sign up, put your email address in there, and we'll send you an email about once a week, let you know what we're doing. So thanks for coming, everyone. Thanks for listening. We'll be back at the same time, same place next week. Until then, may all the options you bought finish in the money, and all the ones you sold finish out.
The Options Playbook is brought to you by Ally Invest. Anything mentioned today is for educational purposes and is not a recommendation or advice. Options involve risk. Please refer to ally.com/invest/disclosures to review additional risks involved with trading options. Securities offered through Ally Invest Securities, LLC, member FINRA and SIPC. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.